Well, tech stocks, they're always in focus. Apple shedding billions in value after the DOJ filed an antitrust lawsuit yesterday, citing that the company's alleged monopoly in the iPhone market. Apple is a big underperformer so far this year. It's one of just 3 Mag 7 stocks that are underperforming the S&P 500, the others being Tesla and Alphabet. Our next guest, though, is saying that there's one Mag 7 name that is still a buy. And he's taking a look at shares of Microsoft. They're up about 14% this year, outpacing the S&P 500. Today, they're off just about 0.2%. But KeyBanc initiating coverage on Microsoft as overweight, the price target of $490 a share. Joining us is the analyst behind that call. We have Jackson Ader. He is KeyBanc's managing director of software equity research. Jackson, it's great to have you here. So talk to me just about the bull case that you see from Microsoft at this point and why they are among the best positioned within the AI space.
Sure. Yeah. Thanks for having me, Shauna. So there are really a couple of things that we like about Microsoft. The first is in AI, there are really 3 ways that we see you can monetize AI, and they are a leader in the 2 ways that we actually like. So between Azure actually metering some of the move to the cloud, more workloads going to the cloud from AI, and from just direct monetization from Copilot. $30 per user per month is a pretty straightforward way to actually get a return on all those investments. Those are really in AI. They're leaders. They are actually putting revenue on the board right now, whereas a lot of other software companies, it's speculation and it's the future. So as far as AI is concerned, those are the 2 bull cases.
And Jackson, there has been some debate around Azure's growth right now, it being a mix between AI and non-AI, and some have taken issue with that mix. The fact that AI is playing a bigger role within that, should that be viewed as actually a good thing, a bullish view here at this point for the stock?
Yeah, I'm not terribly bothered by it. I'm not sure why I'm supposed to view I call it the first generation, right? The move from on-premise to public cloud as positive and the AI workloads as any different. Now, I do understand the pushback that because of maybe the partnership with OpenAI and, it's a quasi credits acquisition type of relationship where maybe the revenue isn't as high quality specifically as it's related to OpenAI. But I think that when the company talks about more of the AI workloads on Azure coming from inferencing, I'm encouraged by that. That, in my opinion, should be stickier than the training of the models, where you have this big spike maybe in the initial training, but you have more sustainable workloads coming from inferencing. So I'm not particularly bothered by the split between AI and call it traditional public cloud. And we're seeing from other public cloud vendors that the first generation, just the plain vanilla, call it public cloud, is actually starting to reaccelerate. We're getting past the optimization cycle. So I see them both as tailwinds.
I mean, take a look across just the software space here and the catalyst that you just laid out here from Microsoft stock. How does that stack up against some of those rivals, and why do they have, or what's really giving them that edge, or how big of an edge is it in the long run?
Well, based on our survey work, when you ask CIOs about whether it's the strategic vendors or just the public cloud vendors and the capabilities in AI, Microsoft dominates. More CIOs responded with Microsoft having artificial intelligence capabilities that are superior to others than any other vendor, and actually doubled the next rival in terms of AI. It's hard to disaggregate how much of that actually is tangled up in the relationship with OpenAI, but customers are saying, this is where we want to go for artificial intelligence. This is where we want to go for the vendors. As far as some of the other competitors, I actually think that when we saw what we saw from Oracle results a couple of weeks ago, where Oracle Cloud Infrastructure put up good numbers and good growth, and the backlog related to that OCI number was massive, was a hugely above street expectations. That's a validation point, I think, in artificial intelligence driving more workloads to public clouds. And so we're looking around at competitors and saying we're getting some validation, and customers and CIOs are saying that Microsoft stands alone as a strategic vendor here, and that should be good in the long run.
Jackson, when you take a look at some of your other coverage within the software and enterprise space here, you also like ServiceNow, you like SAP, like Oracle, like you were just talking about. What's that common thread? Is it just all about AI, the plans there, and what that's going to do to these companies' bottom lines? Because it is a little bit different when it comes to each of those bull cases that you've laid out for these top names.
Right. So it's not all about AI. And we can run through some of the specifics on those, but if you think about Oracle, sure, a lot of their growth, and they are entering that kind of single metric mode where the quarters are going to be defined by, did OCI grow by this percent, or did it grow by this percent, plus or minus a couple. And so I understand that as far as Oracle is concerned, we're maybe moving into the AI drivers, but SAP, ServiceNow, and Oracle, they also have just large cloud platform plays, and specifically around the ERP players, so SAP and Oracle. As their cloud applications start to mature and you start to see the benefits, not only from the efficiencies of moving applications to the cloud, but also the product enhancements that should come with faster innovation, quicker time to market, they should be able to close the competitive gap against the pure play cloud competitors in the ERP and in the HCM space. And so that should help gross retention. It should help net retention. And I think that there are cloud application reasons why you should own Oracle and SAP. ServiceNow, ServiceNow, it's the ultimate platform. And we said in our initiation, ServiceNow gets to see where the puck is going and skate there, because they can spin up seemingly any workflow automation tool for any use case. They are the ultimate platform in a sector where everybody says they want to buy a platform.
Yeah, certainly. We have seen a strong move here from ServiceNow. I'm looking at the year-to-date chart, up just about 13%, but the 1 year, though, up nearly 80%. Jackson Ader, great to have you. We'll look forward to having you back here on Yahoo Finance soon.
Thanks, Sean.